Welcome to this month's Fintech Firebrand. I'm Virginie O'Shea, founder of Firebrand Research, and I'm here to chat to you about this month's Fintech and finreg news. Now, it's been a little quiet on the finreg front in Europe, as usual during the summer months. We've seen a lot of the European regulators take their usual summer break. So we've had a lot of revisiting of existing white papers, reminders about the need to feed back to open consultations and the like from ESMA and co. Across the pond, however, it has been quite a busy summer for the US regulators. We've seen a lot of focus on crypto assets over the last couple of months, certainly since the release of the President's Working Group on Digital Assets report. We have seen activity by the SEC and the CFTC on the topic of crypto. We've got another 10, I think it is, roundtables planned by the SEC on the topic of digital assets in the coming months. And they've also put out Project Crypto, which I may have mentioned before, and that's their focus on reevaluating the regulations that already stand with regards to crypto to see whether they are fit for purpose. Within the report from the President's Working Group, there are a lot of recommendations to look at areas such as taxation regulation or the treatment of crypto assets under tax regimes within the US. There's been also some pushback from the industry about the Basel Committee's planned changes to risk weighting for crypto assets that are due to come in the next year. So there's been pushback to see if those can be re-evaluated. There is at least a request for a consultation and a delay on that front, given the changing nature of digital asset regulation across the globe at the moment. So it's interesting to see a lot of those dynamics in play. Certainly, there are plenty of things for the industry to get their teeth into come September with regards to digital asset regulation. On the CFTC side, we've also seen their own crypto sprint initiative take off. The CFTC at the moment are a little short-staffed. You may have noticed that they do not have a new chair. One was expected to be appointed very soon, but that process has been somewhat delayed. I know that Brian Quintenz was up for that particular nomination. It's just been a bit slow on the Agriculture Committee side. So it'll be interesting to see whether that shakes out quickly in the next couple of weeks ahead of September. We've obviously got the Labor Day weekend coming up as well, which is always a big holiday in the US. So we will see what happens. So watch this space on that front. Less digital asset focused, but equally important from the SEC's remit is the indication this month that the shareholder proposal rules are being reviewed by the SEC to ease compliance burdens, as they say, looking at issuer disclosures and what is considered material to disclose to investors. Now, this can be seen as part of the agenda and the pushback with regards to environmental, social and governance concerns. Equally, there's been a lot of discussion about how much ESG data needs to be disclosed and what is material under that particular topic. But overall, governance is a big topic for the SEC in the upcoming agenda to understand what shareholders actually need to see ahead of voting as well. So what is the reasonable standard of materiality for the SEC? So I think those disclosure rules will be changed and we can anticipate some debate within the industry on that topic going forward. Now, not to talk all about the US, but another interesting development at the SEC was the confirmation of a chair or a focus point within the commissioners to lead the US Treasury clearing reforms. Now, they have been delayed. Obviously, we saw in February that they've been delayed by a year, pushing back from 2025 or December 2025 to 2026. And then for the first half, which relates to cash, and the second half, which is related to repo, has been pushed back from 2026 to 2027. So we see that is not going to be further delayed. That's an indicator having a chair in place to lead that work. Commissioner Ueda is going to be in charge of that, and they've updated the FAQs for the industry on the SEC website, which is a clear indicator that they are starting to get the ball rolling to move the industry and engage with regards to those changes up. Fintech angle, we're seeing a huge amount of discussion in the industry about AI, agentic AI in particular. We've seen ups and downs within the AI sector in the market, particularly down at the moment in August. We are seeing some impacts of various pieces of research on that topic, suggesting that the ROI on AI isn't as great as it could be, likely because of the sort of experimental nature of the technology at this point in time. We are seeing a huge amount of different initiatives within individual firms. We've seen JP Morgan with, thousands of different trials and pilots across its organization, for example, with regards to AI. So very interesting to see what individual firms are doing. Also very interesting to see the enthusiasm of the regulatory community on the AI topic. We saw the Federal Reserve head Michelle Bowman this month suggesting that there should be more adoption of AI and DLT across the industry and within the regulatory community to build more efficiencies and benefit from technology change. So rather than tech neutral, it seems very interesting to see regulators pushing certain angles of technology. We've also seen the Monetary Authority of Singapore in its annual report talking about its own usage of AI and some of the benefits it's being able to deliver by adopting AI within its own framework, although it is obviously also examining the impact of AI with regards to risk. And then my final thoughts, I guess, relate to that concept of technology being technology neutral as a regulator. It's interesting to see that that's what most regulators will call themselves, but yet when they are promoting a certain technology, it seems less than neutral, if you ask me. But certainly it's very important that the underlying assets are what we think about rather than the technology itself. If we are to have really technology neutral regulation, we shouldn't be adapting something just because it's on a DLT platform. It doesn't change the nature of the asset. It may change some of the risks though. So certainly as we digitalize, I think I've talked about cybersecurity endlessly over the months. But certainly once you digitalize an asset, particularly if it's a digital native asset and it exists only on chain, as opposed to within traditional systems, there could be risks inherent in that need to be factored into the equation, particularly from cryptography from the key perspective. So certainly there have been lots of pieces of research. MAS is one of the regulators that's done a huge amount in this area. We're seeing other regulators doing a lot of work now also. But certainly when we think about the development of quantum computing, we really do have to think about the risks of digital assets in that regard. So the more we push down this road, the more we have to think about novel technology risks and different cyber criminals out there, and how well funded they are, how innovative they are, and how professionalized they are. So I expect a lot of these topics to occur next month during Cybos, which will be attending. So please do drop me a line if you want to have a chat on the show floor. I'm happy to do that. It should be a good one. We're going to be talking about standards in a particular session in the Standards Forum. So if you want to come in and listen in to our perspectives on that topic, in particular, we're going to be talking about digital asset standards and ISO, the fan favorite ISO 20022. So definitely keen to catch up there.